Hemant Mohapatra joins us today from Bangalore, India. He's a partner at Lightspeed India. Before Lightspeed, he invested in software and infrastructure at E16Z. Earlier was a PM and engineer at Google and AMD. Hemant has invested in companies including Supabase, Pixel.space, Sarvim.ai, Airbound, and Pintu, amongst others. In addition to investing, he's an award-winning poet whose work has been featured in major anthologies. Hemant, welcome to the show.
Thank you for having me, Nick. Real
yes, it's a pleasure to have you. I've been following you for some time and watching your content, so it's really fun to have you here today. But can you tell us your quick sort of 2-minute backstory and path to becoming an investor at Lightspeed?
Yeah, I mean, look, maybe just really sort of a big pullback. Grew up in India, went to the US in 2003, right after 9/11, and it was an interesting time to be in the US. Spent about 15 years there, like most Indians. Before we really figured out what we want to do with our lives, we want to be an engineer. So that's what I tried to do. I worked for AMD as an engineer. I should have kept my stock, frankly. Wouldn't have required to work anymore, but sold my stock at the bottom. Moved out of the US to go to the UK for an MBA, came back to the US and joined Google. And then I was doing a bunch of this interesting, early stage work for startups at Google in Google Cloud, because, our charter was to basically grow the business by doing anything and everything. So I did pretty much everything except writing code. I did write some code, which never really got productionized. But, we did some small M&A deals that did not hit the corp dev team. We did some small investments. We did a lot of product launches and BD work and all of that, partnerships. And then I ended up sort of spending a bunch of time with early stage startups and began really liking it. Did a few of my personal investments. And I was actually quite happy at Google 5-6 years in. And one day I get a call from a friend of mine from A16Z, and she said, why are you wasting your life at Google? And if you want to start a company, come talk to us. If you want to join a company of ours, talk to us. If you want to make investments, come talk to us. And I actually remember looking up what Andreessen Horowitz is, because I was that unfamiliar with the ventures landscape. And like, okay, well, this is kind of a cool job, and I like my job, but this looks really hard and tough and something I've never done. So I ended up getting in the process there and really liking it. And I wanted to move back to India for many years. So I ended up taking the opportunity with Lightspeed in 2018 and moved back. And I've been here since then.
Perfect. And tell us a bit about the thesis at Lightspeed and your focus there.
So we are a global venture capital firm. We manage about $30 billion globally, of which about $1.5 to $2 billion is in India in early stage. And look, at this point in time, I think there are far fewer categories that we do not invest in than we do. So we are fairly horizontal. We invest in consumer companies, and we were one of the first investors in Snapchat in the US. We invested in infrastructure companies, hardware companies, deep tech companies, frontier tech companies. So fairly broad charter. I personally focus a lot on global AI and software opportunities coming out of this part of the world. And maybe about 30% of my time, give or take, goes into what we could call frontier tech, which at least I define as companies and technologies that are absolutely net new to the world, anywhere, or net new to India. So I've spent time in crypto, some climate. I've been investments in space tech companies, keep looking at, robotics and quantum and a variety of other things. So 80% of my time goes into AI and the rest in everything else.
And is it entirely India focused, or do you focus around the region of Asia?
Yeah, so we cover, from the India fund, we cover all of APAC. And we loosely define APAC as, all of Singapore, Indonesia, Bangladesh, and a variety of other countries where entrepreneurship is. And, we dabble in other regions like Japan a little bit. We spent some time there. We spent some time in South Korea, but not very active in those regions yet.
Perfect. I saw Vaibhav Gupta in your portfolio. He was a classmate of mine.
Are you serious? Wow. Yeah. He's a founder of a company called Moran, and one of the fastest, most critical company in the B2B infrastructure space in India, in the B2B commerce space in India.
Oh, I think I'm talking about the founder of Udaan and Flipkart.
Yeah, that's the guy. VG.
Yes.
VG. Yes.
Perfect. Well, I was reading in the information recently, and they were talking about Lightspeed as one of the most exposed firms to AI. Most of us are optimists, and we talk about the opportunity in AI, but the information kind of played both sides of it, right? Is this a boom? Is this a bust? Is this overhyped? Because we've seen these waves before. We've seen lots of capital plow into a wave, and we've seen corrections, right, along this innovation curve. So talk about what makes you bullish on the firm's current positioning and exposure to AI?
Yeah, look, I mean, I think this will not surprise anybody that as most VCs in the world, we look for transformational changes and we try to time it as best as we can. Nobody really gets it right all the time. But the change in our internet, the change in our mobile, the change in our AI, I think these are transformational changes. And once they start to disperse in society changes in pretty dramatic ways that we cannot predict today. How people date each other, how relationships are built, how buying and selling and those things happen, and our travel happens, and so on and so forth. All these things were very different 20 years ago, 10 years ago, and will be very different 10 to 20 years from now. So we do think of us as people that try to live as much at the frontier with the founders who are trying to create and push the frontier forward. And in many cases where we have, the right opportunity, the right founder, the right kind of business and growth coming together, then we deploy capital into those, right? In AI, is there a hype? There absolutely is a hype. Try building a company without the hype cycle. Everything is 10 times harder. Nobody wants to join your company. Nobody wants to buy your product. Nobody wants to invest in your business. So I actually personally love hype cycles, as long as you're discerning of where the hype ends and not drinking your Kool-Aid too much, which all the best founders do, and hopefully the smarter investors would. I think you can make a lot of money and you can create a lot of change. So I absolutely love hype cycles, as long as you are careful about which founders you put money into and what kind of segments in the wave you put what amount of money into. And we can talk a bit more about in AI what kind of segments we see and why have we deployed what kind of dollars into which of these segments.
And before we jump into those specific segments, which of the trends do feel overhyped to you right now? And where do you think are some opportunities that, may be hiding or may be underhyped, but will be coming in a big way?
In specific to AI?
Across the spectrum.
Across the spectrum. Let me peel it one by one. Maybe I'll pick up a few big categories. In AI, I think there is a pretty good deal of hype around the possibility of AGI and what it would mean to us. My personal view is that when AGI, quote unquote AGI, comes, it would actually feel like any other day. An AGI would be a human of 98 IQ, which is the average IQ of the humans. It'll do a few things that would really surprise us. It would do nothing really, really well. It's almost like a human born with almost the basic intelligence that a human brain provides, which is a function of your brain size, your neural capacity, your neural networks, and all the things that are kind of combined with each other and how dense they are and all of that. And then you train that human with different things. The same human becomes a cricketer, the same human becomes a mathematician, the same human becomes a poet after years and years of training. And that's where the weights of your neurons play a role. You may have a lean towards the artistic and you may have a lean towards the mathematic. And similarly, the AGI probably would look a lot like this gooey mesh of neurons tied together in different ways that are impossible to really separate out. But a question comes, an answer comes out. And sometimes the answers are obvious. Sometimes the answers are really surprising, that the AlphaGo moment, right? And then you train that neural net to be an expert. So at one point, the same AGI model would be an Einstein, and the same AGI model would be inside a robot who can really navigate the environment in a very fluid way, and so on and so forth. So for me, the AGI wave seems like, I think it would look like, okay, well, whatever. What do we do now? And then the real work begins to train it, to optimize it, to standardize it, to make sure the outputs are reliable, safe, unbiased. That's where the real world begins. So I think that's one thing that sounds like it's overhyped. What I think is underhyped, frankly, is I think people are still too skeptical of when it works, just how powerful the output can be. And they are almost like this fulcrum that can almost lift the world up. It is that powerful a fulcrum. Just today, I don't know if yesterday maybe, there was a paper that came out of China, Alibaba's research, and what they have been able to figure out is the possibility of a patient having duodenal, intestinal, or pancreatic cancer 2 years before it becomes a stage 1 cancer. 2 years. And if you know anything about pancreatic cancer, the survival rate of a patient is 5%. With the operation, with the pancreas is removed, and without the removal of the pancreas, it's 0%. But if you catch it at stage 0 almost, 2 years before it actually becomes even stage 1 or 2, the chance of survival becomes 90% and above.
Wow. And
the specificity of the model is 96% or 92%, which means if it says you may have stage 0 cancer of this kind, 92% of the time you actually do have it.
And that's testable at stage 0?
It's a paper in Nature Bio. So
right.
peer reviewed. I'm guessing they'll go into lab tests and so on and so forth, but it's a peer reviewed Nature Bio paper. So imagine the implications of that. China loses 250 to 300,000 people to just pancreatic cancer every year, given the meat consumption and all of that stuff. And this could save a lot of lives. And all it took was some GPUs, some data, and a transformer model.
Remarkable.
So
the healthcare implications vastly underestimated at this point.
Healthcare implications vastly underrated. Vastly. And there are so many segments like that where a small change could change the lives of many. In India, for example, the population is so large, the number of qualified GPs to take care of that many number of patients is actually minuscule. I think the ratio is roughly 1 to 2,000 maybe, versus 1 to 20 or 50 in most of the advanced nations. And many of these people do not live in cities. They live in villages where doctors don't want to go. And imagine a world where you could take a photograph and get a diagnosis done over a cell phone. And it is so accurate that over time, legally, you can prescribe medication through that diagnosis. You don't have to travel 2 days in a train to come to a hospital to get a diagnosis, to get medicines, prescriptions, and then medicines. Imagine,
you've seen the breadcrumbs of that already, like in the pandemic, scripts being written over the internet, and
Exactly. Or legal cases in India. India has decades of backlogs in legal cases, and they're all tiny legal cases, some personal dispute, some civil dispute, some consumer dispute. And if you could actually train a model on Indian legal data well enough so that the dispute resolution is final and unassailable in the court of law, you essentially have a lawyer LLM that has all the legal right to pass judgment on small issues, like Harvey is doing for for traffic tickets in the US and so on. That would really clear. I mean, imagine the amount of GDP value you could create by just this one single authorized LLM to pass judgment on people's conflicts. I mean, stuff like that is so powerful. People are highly what it could actually mean to all of us.
As AI capabilities become commoditized, where do you think the long-term defensibility comes from? Is it data ownership, distribution, vertical focus? We read a lot about context lately in the workflow, or is it something else entirely?
It's a great question. Let me sort of go back, give you a structural response, and we can talk about AI specifically. I think most of these technology super cycles come in 50, 30, 50, 70-year waves. What does that really mean? The wave begins when 20, 30 years of research and development has gone into a certain area. Let's go back a few 100 years or 100 years, oil and gas, right? Where do you go dig for oil? So under most probability, oil is there and will come out. Took decades of research. So much so that when US figured out how to do it, they ended up occupying a variety of countries because they knew if they were to dig oil there, it will be oil, right? But that took 30, 40 years and probably billions of dollars of R&D expense. And in the beginning of the oil revolution, oil being the commodity that is the resource that has been now unlocked and will be distributed over time to everybody. That first phase of that super cycle, that technology super cycle, is what I call extractive phase of the cycle, where the industries that are actually extracting that resource from wherever the resource exists are the ones that have the most momentum that will attract the most capital, that will grow the fastest and will have the highest alpha, because you are in the part of the extractive cycle. If you are close to the ground, digging for oil, you are the Exxon, the Chevrons, the BP, you create the most value. Which is why if you look at the stock prices for these companies from the mid-90s to 2000s, extractive cycle of oil, it was expensive and it got cheaper. Nobody had it, then everybody had it. They were the most value creative. You look at their stock prices from 1990 to 2020, they're kind of flat. Even though the price of oil had actually gone up quite dramatically over that time. The actual alpha was in software and internet. So the extractive cycle is where people should invest when a super cycle is very early in its stage. And the extractive cycle takes a lot of capital, oftentimes billions and more. And it actually works purely on price. The differentiation is price. You'll have 5 or 10 companies that are going to be pretty big, and the big ones will become bigger. Why? Because they have the most capital to drive the prices down.
So is this the case for the AMDs of the world and NVIDIA?
Yeah, this played out in the CPU and the GPU super cycle. In the 60s, it began. There were actually 5 or 10 chip architectures. HP had its own, SunSpark was there, and there were a few others. And x86 came, and IBM had its own, and so on and so forth. But eventually, it all compressed to just x86 and maybe ARM to an extent, right? Again, these are all lower down the layers. The job was to extract, compute from silicon. They were the extractive phase. And then over time, that extractive phase became more commodity, and the value moved to what you build with that resource. You build cars with oil, and you build engines with oil. That's where the car companies started to grow very quickly. And the Googles and the Facebooks took that, CPU cycle and then built on the internet. And the stock prices for these companies kind of really was flat. Then the GPU cycle came, and the same thing played out for the first 10 years. It was kind of slow. Then you could extract the AI. AI token is the next resource. So now we are in the extractive phase of the AI resource super cycle. The first few years was the closest to the ground was NVIDIA, AMD. And NVIDIA obviously has taken up, majority of that value because these extractive cycles are capital intensive, R&D intensive, and they won't have many winners. They'll have only few. There'll never be hundreds of CPU or GPU companies. It'll be a dozen or half a dozen or less. That's what's played out. Above that are the foundation model companies that take the AI tokens and make it intelligent, make it useful. Above that are data and infrastructure companies, middleware companies. Above that are application, vertical, horizontal. Above that are solutions companies and services on top of that. So that's where the wave is going to go, right? So the first few years was absolutely dominated by what I would call all the commodity resources, the GPU cycles and the foundation models. There'll be many foundation models in the beginning, and there'll be few over time because they only survive on price differentiation and some performance differentiation. But primarily, as you get more and more commodity, price is what drives differentiation. And who can drive prices down? The big corporations like Google, Meta, and Amazon, who have a large balance sheet to put prices down, or companies like OpenAI, Anthropic, Mistral that have raised billions to be able to sustain long price wars. And the price to win is that you are able to stake your flag on a piece of land that is so vast and so important that for the next generation of companies that are using that resource, the AI token, the oil drop, the GPU cycle, the CPU cycle, will pay you rent. Because there is no other land worth building on. This is it. That's why.
Hemant, is there a case to be made that this extraction cycle will be more condensed? It will happen much more quickly than...
It already is. Already is. How many foundation model companies can you name on your fingertips now? And I can guarantee you 2 years ago, there were more.
Yeah, less than 2 hands.
Yeah. And then over time, you'll have the excitement will move a layer above, a layer above, a layer above. Developers will move a layer above, and value will move a layer above, and investments will move a layer above. And that's what we're starting to see now. Over time, it ends at the application layer. And that's what we're going to see, and that's what we are seeing.
So is Lightspeed actively investing, let's say, a couple tiers up in the middleware and infrastructure as well as the application layer, or are those still somewhat nascent, do you believe?
I would say we are above the AI layer, below the AI layer, around the AI layer. We invest across the stack. We've invested in hardware companies. We've invested in foundation model companies, data infrastructure companies, middleware companies, and application companies, both in consumer and in enterprise.
So just to circle back, just to circle back to the question then, so where does, if we're not talking about the extraction layer or, the LLM layer, where does long-term defensibility come, from
it depends on
who you,
it depends on who you are talking about. For the foundation model layer, the long-term defensibility is essentially in getting adopted as the de facto piece of land people want to build their houses on. For some, it is
Google, for instance.
You have to be Google, Anthropic, Mistral, OpenAI, NVIDIA, Sarvam, and so on. You have to dominate that space and own it. And some of it would be improvement performance of a certain kind. Like you could be much better at image generation. You could be much better at code generation. You could be much better at synthesis and reasoning. You could be much better at something else. And there are different models for that. You could also build specific models for bio. You could be the best bio model to generate insights on cancer ligand binding molecules that you could put into test, and so on and so forth. And there are models like that. And there will be absolutely price, as differentiation, and just to a diminishing order of importance, performance, because performance will asymptotically match each other over time. The first few years will be a large gradation of performance improvement, but the final few years would be, we are kind of fighting for the last millimeter or an inch, not the last mile. And then, so that's the defensibility for the first few years. And these layers are already solidifying and becoming, dominant, right? And that wouldn't change much because, as I said before, in the more lower down the stack where it's highly defensible because it just takes the big ones become bigger. There is no reason for you to start another Anthropic now. What would you differentiate on? Performance, price, how? So, and then we talk about the middleware, right? This is the one that stitches together the application with the foundation model. It is the hard part of the stack right now. Why? It is very hard to know what part of the middleware will be eaten up by the foundation model layer. 2 years ago, things that were trying to do the job of a database or, converting unstructured to structured data and so on, those were great opportunities. But now foundation models, you can throw a PDF file at it, audio file at it, video file, it'll just figure it out internally on its own. So they don't really know. It's harder to really invest there, mostly because they don't really know how far the foundation model layer will come up. And there's not enough direction being given to them today from the application layer. I want this API, I want this throughput, I want this spec, and so on, because there are not that many large applications that have been built out. The only big one today, outside of a few other companies, is ChatGPT, and it's a full stack app. They use their own middleware and their own foundation model over time over their own,
vertically integrated
data centers, right? So maybe even more on silicon. So they are the hardest piece. And application layer is where the value will eventually move. Like I said, that's where the alpha will go. But then obviously it is much harder to call winners at the application layer. So there we really orient towards the founder quality, their vision, how clear is the vision, can they build a solid team, and in some extent where relevant, growth, product, all those things. So we really orient a lot towards long-term nature of, their vision versus, leaning into just short-term growth that will go away equally quickly.
What are your thoughts on application layer businesses that are in, a very specific vertical with very specific workflows, specific context? Can winners emerge there by kind of developing, their experience around those workflows, building their data sets, their broad, deep data sets, and just having an edge that, other entrants that are well capitalized with really good teams can't catch up to?
Yeah. So I'm sure you will hear a lot of people saying that, vertical is great. Love vertical businesses and all of that. But I'm trying to unpack why that is the case. It is a good answer. It is the right answer for the most part. But let me try to unpack why that is the case. We know the scaling laws of AI. There is the algorithmic advantages. You can build a better algorithm and it'll converge faster to the right answer with less compute, less data, and all of that. But that's one layer of improvement you can make on AI. My AI is better than yours because I'm using a better model than transformer models. Second is just compute. I have the same data as you, but I just have more GPUs, so I'll just run towards the answer faster. Third is I have just better data than you. You can throw as much compute. If the data is completely random, you will never converge to the right answer. And we know that at the scale that these foundation models are operating in, it does look like the bitter lesson applies, where you can throw a lot more compute to generic enough data, broad enough data, it starts to converge beyond a certain point. You can actually brute force your way to the answer without having specific data. But what that actually implies for us is that the convergence to the right answer is a combination of algorithm, compute, and data. And enterprises have a ton of data. Now, there are two kinds of workflows we see. One is what I call the open-ended workflow, where you say, do X, X gets done, but you don't know how it was done and to what quality. Let me give you an example of, let's say...
Black box, yeah.
Yeah. It's like, it's an open-ended loop. So let me give you an example to make it real. Let's say you have a company that is taking data from an Apollo or a Bombora or ZoomInfo, and it goes online, scrapes the web, and says, "Oh, Hemant is so and so age, so and so gender, so and so work profile," and then it goes into a foundation models and writes me a beautiful, powerful email. Then it says, "Go to HubSpot, and there are a million Hemants. They have different IDs. Go run a campaign against all of them, and come back to me, and I'll probably generate new leads." Now, this layer that sits in the middle between the name database and the workflow that sends personally crafted, customized emails to millions of these names and email addresses, this layer does not talk to HubSpot, which is running the campaign on the other side. HubSpot knows which of these emails are opened. HubSpot knows what subject line worked the best. HubSpot knows whether this person opened an email between 4 to 6, or WhatsApp was better than SMSs, was better than emails, was better than HTML, was better than text or video. HubSpot knows that. HubSpot has no reason to push this back to this company. Okay, HubSpot can integrate directly with the database and say, if the only value this person is adding in the middle is writing beautiful customized emails, I can do that today myself. I can build a model. So they will compress this middle. And this middle piece does not improve because the next time it gets another million Hemants, it does not know what to do differently from the last campaign because the last campaign results never came back to it. So it's an open loop AI. It does not converge very quickly, and the quality does not improve very quickly. So we really care about in the application layer, we really care about founders who know what the open loops in their businesses are and how to, because they may not all be closed today, but you have to have a view of how to close them. Will it require more data, more control over workflow? Would it require more complicated workflow? Would it require more integrations, partnerships? They have to have a view of that. Okay. And it just so happens that in vertical companies, let's say healthcare, the workflows are much more well-defined. You go to a hospital, you are a male, you are a female, you are a geriatric, you are a newborn. It's the same form. Different names, different age, different phenotype, different numbers, weight, but everything else is the same. It's a step-by-step, legally defined process. You cannot skip anything in the middle. So just because vertical software is a lot more defined, it is easier to close the loops. To know what the open loops are, it is easier to close the loops, which is why the AI that is being built for vertical software is converging faster to high fidelity, low loss rates, high reproducibility, and so on and so forth. Which is why the value that is perceived by the customers today seems to be just higher on some of these companies versus something that's much more horizontal. It could change over time.
Yeah. Will the horizontal opportunities catch up as the models and the amount of compute? Yeah.
Absolutely. They will absolutely catch up. And we've invested in both of these categories. But that's the underlying reason why some of these things today seem like they are converging faster, having better ROI today. But over time, it's anybody's guess whether the horizontal can or cannot catch up. As long as they're able to close the loops, they absolutely will, theoretically.
Hemant, is there risk? You talked about before that the foundation models in some cases have gobbled up the middleware, right? They've decided they can do that themselves and put many companies out of business. There's some famous YC lists, floating around of companies that were put out of business overnight. Is that same risk the case at the application layer as, the models get better and the compute increases?
This is a very interesting question. The railroad companies do not run they don't run the passenger, business, right? Boeing does not have an airline. It does not have the muscle to brand itself as an airline, even though
Yeah.
without Boeing, there is no airline business. So it is unusual. The people who own the telecom wires could have built a content business, but they did not. I mean, the Netflix versus Comcast lawsuit in the U.S. is a great example where Comcast was claiming that, you are essentially using my wires that I've spent 20 years digging into the ground, fiber over the net or whatever, and you are making a ton of money on every single customer that I do. Why should I get a cut of that? And the lawsuit kind of went pretty deep, and at one point, Comcast really throttled the Netflix traffic to its end consumers because they said that we own the end consumer. You cannot service content and charge them $50 when I'm charging them $20. And then Netflix won the lawsuit, and then the unthrottling happened. So,
and we've also seen the counterpoint. We've seen businesses like SpaceX vertically integrate and build full stack.
Yes.
Instead of just occupying one layer.
Yes. So we are now starting to see in India, Jio is a good example of a company that owns the fiber network, and they also own a Jio TV and content business. So we're starting to see some of these businesses becoming fully vertically integrated and have the muscle and the culture to build a vibrant consumer brand while also having had the muscle and the right kind of, talent to build the infrastructure part of this business. It is rare. It is happening with ChatGPT, which is building the infrastructure piece, but it's not an API company only. It also has a consumer brand called OpenAI and ChatGPT. And we are seeing SpaceX that may end up building a consumer space travel business, tourism business, along the way as they're building the pipes to the space. So I think it's rare, but back to your question, am I worried about it? Only in rare instances, but more often than not, those who build the extractive part of the business have not shown historically the metal and the pizzazz and the ability to really rebrand, reinvent themselves to also build what needs the resources and then gets distributed to the consumers. The oil companies do not build the cars.
Talk to us for a minute, Hemant, while I have you here. Talk to us a minute about India's sort of approach to medium of exchange and currency. And, I've heard some about this, so you may have to, give it to us in layman's term for the audience. But I've heard about this, this structure of currency and the way it's being handled and incorporation of blockchain and tokens. And, I'd love to hear kind of how you're viewing that and if you think this is, a positive opportunity for the country or if it presents a bunch of downstream, implications that are going to be difficult.
So in India, I mean, this TLDR is that, 1.4 odd billion people, 900 to a billion odd people online, I would say perpetually online. Average age of the country is under 30, 25 to 30 years of age. And very digitally native. India has one of the world's lowest cost of internet and some of the highest bandwidths in the world. I pay about $2 a month, give or take, maybe $3 a month, give or take, and I get 4 GB download free per day. And I get 4G to 5G speeds pretty much wherever I am in the country. So that's where India is. India spends also some of the largest amounts of time online per online capita. So that's where the country is. From the currency's point of view, we have something. So the currency, actually, we had this moment in India called demonetization, where a lot of the physical currency was kind of removed and taken back by the banks under the RBI, which is the federal bank for India. And then that was the moment where India started to really digitize its currency, so to speak. Where I don't even actually right now I'm sitting in my office. I don't have my wallet with me. When I travel to the US, I keep forgetting my wallet in the hotel because I'm just not used to carrying it. Basically, you can go to the streets and buy vegetables with a street vendor and use what is called UPI, Universal Payment Interface. Everybody has a QR code next to their offices, next to their hotel reception desks, next to their shops and so on, and you just pay with your phone. And your identity is tied to your phone number. Yeah. Right. So
is your identification also digital as well?
We have something called DigiLocker, which is the digital locker, and it is the legally approved way to store your authentication. So we have something called the Aadhaar card, which is essentially the biometric card for each Indian. And everybody stores a digital identity on there. And we can get into a airport and we have a face scanner at the airport, which you have to go through once to get approved. Then you can just pass through the airports without any identity. But even if you don't have the identity figured out at the airport, some airports don't have it, then you can use the digital pass and they are legally bound to let you in. So yeah, all that exists. So in terms of your, the currency, India does not have that much of a vibrant crypto ecosystem because of regulatory pressures in India, because a lot of the stuff was, essentially, for lack of a better phrasing, it felt like money tax saving, like tax evasion was happening in India for the longest time. And I think the baby got thrown out with the bathwater because there was a lot of great companies building crypto companies in this part of the world. And because of some bad players, all of them had to be, exited out of the country. And then they're all building there, but not staying in India. Blockchain, on the other hand, is something that the government has actually shown a lot of interest in. We don't have a CBDC currency yet, so we haven't really fully digitized the Indian rupee. But I think there's work in motion to digitize, your land records, digitize the currency, and digitize, your healthcare records and so on a blockchain. But ongoing things not done yet.
And your opinion on, are these the type of infrastructure capabilities that are going to position India really well for investment in the future? A lot of people just talk about India as a cost arbitrage market, but it feels like it's not that. It feels like real invention, real innovation can come out of India. And with some of the factors you mentioned, it presents a lot of tailwind for innovation.
Yeah, absolutely. We invest in many companies in what you could call net new innovation for the world. So we invested in a company called Pixel Space. It is building hyperspectral satellites from India, and they are the most advanced hyperspectral constellation in the orbit today, right now. Highest resolution, highest visit rate, and the highest throughput. And there are 4 or 5 companies in the world that do this, private companies, at the resolution, but they are not in space yet. They're still in the build phase. So we are the first and we are the most advanced. So India does have, a fairly vibrant ecosystem around space tech. It has a very vibrant ecosystem around semiconductors. In fact, 20-25% of AMD, Intel, Texas Instruments, and so on, the design teams sit out of India. Quarter of these companies are actually in India, and a variety of things like that. So what we do need to really focus a lot more on is to attract the best quality India talent back to India. What China did with their, I think it was called the 1,000 Mind or the Million Mind project, where they pulled back high quality researchers that had exited out of China to the US in the 90s. They targeted individually each of them, paid them high salaries, gave them a lab to run, and they brought them back. India needs to do a lot of that. That's one that I think the government is thinking about, and we're trying to shape that thinking a little bit from our side. Second thing is India needs to spend a lot more on infrastructure development. India's infrastructure spending over the last 7 years has been as high as we have spent over the last 70, and will be equal to what we will spend in the next 5. So we are spending a lot more infrastructure, just the roads, the networks, the airways, the railways, the waterways and all of that, but also a variety of other things like a semiconductor plant or a solar farm or so on and so forth. But I think we still need to do a lot of work in improving India's R&D contribution to the world. We are sitting at 1 to 1.5% of AI papers that get published in top publications come out of India. It has to be at least 5 or 10% in the next few years, if not more. And China has done a fantastic job of really pulling ahead over the last few years. If you look at ICML, one of the top conferences I think it's happening in Canada this year, 50% of papers have a primary author from China, 14% from the US. A year ago, I think it was kind of equal, if not more in the US. So they have pulled up very quickly. India needs to really do a lot more there.
Perfect. Hemant, if we could feature anyone here on the show, who do you think we should interview, and what topic would you like to hear them speak about?
I've learned a lot from, he's an investor friend of mine. His name is Somesh Das. He's a MD at IVP. I think his clarity of thinking, his approach to investing, and just what the founders say about him is just exceptional. I think he'll be a fantastic audience. He'll be fantastic for your audience.
His name is a good friend. Good friend of the show. He's been on a couple times.
Oh, wow. Okay.
Yeah. Hemant, what book, article, or video would you recommend to listeners?
It's a book of poetry that I've really very close to my heart. It's a book by a poet called Jack Gilbert. It's called The Great Fires. And I love it because I think all great companies and all great founders, at the very kernel of their heart, they are great stories. And my inclination towards poetry and reading actually allows me to really shuffle through the marketing chain and really get to what the person's story is, what the company's story is. So I recommend that to really just understand what a human thoroughfare is all about and how to really get to the heart of the human that you are interacting with, that you're getting in business for 10, 15, 20 years, because you're going to grow old with this human that you're backing. He or she's going to grow old with you. They're going to have kids. People are going to die. People are going to have accidents, and they're going to suffer grief. To know who are you getting in business with requires a certain kind of taste. So this book of poems, I keep going back to it to really cut through the marketing and the polish to the heart of who they really are.
Perfect. Hemant, do you have any habits, tactics, or behaviors that are a secret weapon?
I just don't give up. I don't know how to give up. It's not a habit or tactic. It's just my nature. My father was in the military. I grew up in a military family. And for me, my entire career has been this gratitude ferociter, fiercely one step forward, forward, forward. So it's not really a habit, but it's something that I keep going back to. When things are very tough, I go back to, I cannot give up. I do not give up. I will take that one extra step tomorrow and day after, and we'll put distance between this and then.
Perfect. And then finally here, Hemant, what's the best way for listeners to connect with you and follow along with the firm?
Yeah, so Lightspeed India has a Twitter account at Lightspeed India. Lightspeed Ventures US has a Twitter account at Lightspeed VP. My Twitter is very active. It's Mohapatra Hemant. So I'm very active there and open DM. So feel free to reach out if you know an interesting founder or you are a founder yourself.
All right. He is Hemant Mohapatra and the firm is Lightspeed. Hemant, thanks so much for your time today and all your wise insight and helping us understand what this AI wave means for the future. So appreciate it.
It's a real pleasure, Nick. Yeah, it's a real pleasure, Nick. Thank you for your time.
Thank you.